Hello, YouTube. Justin here. Today we had an incredible snapback as the stock market reacted to Jerome Powell. And the key headlines for today are that the Fed raised rates for the first time since 2018. The S&P closes 2.2% higher, the biggest two-day gain since April of 2020. And that is it. So let's jump straight in because we got a few things to go through. All right. So looking here at the interest rate decision with Jerome Powell, which came out at 2:30 p.m. today. Again, they raised rates for the first time in more than 3 years and sees 6 rate hikes ahead, which means that they're going to raise by 0.25% 6 times. And by the end of the year, we will be around 1.5 to 2%. And by next year, roughly 2.9%. So members also paired expectations for economic growth this year and sharply raised their outlook for inflation. There's only one dissent, and that came from James Bullard today. So he dissented, saying that we should have raised by 50. The market did price in a higher probability of a 50 basis point hike at a future meeting. But as of right now, the stock market had a very nice day, like we talked about. So what's very interesting here is that we filled the gap. So we filled the gap. We actually perfectly backtested our area here on the daily chart at about the low of the day here is at 424.8, which means we just got below 425, and then the incredible snapback. So what's really interesting about today is that normally we will get a knee-jerk reaction in terms of the first move and then the next move. And we can see that here by us roughly treading water here, we dumped down to fill the gap and then advanced higher. So what makes this healthy is that if we would have held the gap and not advanced, this chart would have looked like it needs to fill the gap like it does right now at 400. Because we filled this hole and we closed back above 432, which is roughly a higher high in the week. And it's also going to be that correction territory where we are down from 10% from peak to trough. So as of right now, the bulls actually did a lot of work and started to fix these charts. And everything's skewing pretty bullish going into Friday. So the market might not be properly reacting to the news here, but what we have to keep in mind is that the market does not want to fight the Fed. And as of right now, whether or not the Fed is accurate and whether or not unemployment is going to tick down and inflation is going to come down to their target, the market is not fighting the Fed. And that's what we see here on the tape. So looking forward to what that means, there's summary of economic projections here. We're being told that for 2022, real GDP is going to be 2.8% and the unemployment rate is going to be at 3.5%. What they're telling us here, which, again, a lot of people were having some suspicions and, again, not quite believing the narrative. We heard it in the questions being asked earlier. 2023 and 2024, the unemployment rate is going to be 3.5 and 3.6%. So there's a little bit of discrepancy here between they think that real GDP is going to shrink, inflation's going to come back in line, and we're not going to lose jobs. That's the skepticism we see right now. But again, what's happening right now versus what should be happening are two different things. That's the news versus the reaction to the news. Looking at the heat map, it's pretty bright green everywhere. So financials are up, tech is up, chips are up, and consumer defenses are down, energy is down, healthcare is down. Otherwise, it's a broad-based rally, and there is substantial progress being made by the bulls on these charts. If it holds into Friday, keyword there being if. As we move forward here, we're also it's also notable that we're still in extreme fear, even with the close here at 22, and markets generally bottom on extreme fear. So we were extremely fearful a month ago, a week ago, a day ago, and today. So getting back above 25 would actually get us out of that extreme fear territory. As we move forward here, what I want to actually look at is going to be a year-to-date, a 1 month, and a 1 day performance here. So let's hide that banner there. Sorry about that. And again, why? Well, because we had the best 2-day gain going back to April of 2020. So we're hearing a lot of headlines about best day since, worst day since. And since April of 2020, we melted higher, went to new all-time highs. So the big question here is, are these gains going to hold? And are the leaders from last year still the leaders of today? So as we look here, we can note that none of the blocks are really deep red other than select software, Facebook, Tesla, GM. But otherwise, it's really energy that sticks out here. Everything else is kind of roughly flat. All the trillion-dollar companies are down by at least 10%. That's notable. As we shift here to looking at the 1 month, here is where things start to change a little bit. We note that financials are pretty bright red. Healthcare is pretty bright green. And over here, we got restaurants and the reopening trade losing some steam. but the trillion-dollar companies, meaning Microsoft, Google, Amazon, NVIDIA, Tesla, they look a lot better. Apple's negative 8, but we're starting to see a shift in terms of what is happening in terms of the leaders. Then we look at the last 1 week, and Apple's almost back to flat. Financials are bright green. Healthcare's green. Again, trillion-dollar companies are doing good. Amazon, NVIDIA, notable. And then looking to the one-day trend, we see continuation where, again, Amazon bright green, NVIDIA bright green, financials bright green. Tesla actually picking up some steam here as well. So this could be the leader set for the next leg on the market to go higher. That's the easiest way to try to summarize this. I would also note that the levels we looked at yesterday in terms of where the market had to close to remain bullish, it was 432. That was our R2, sorry, our R3, meaning a weekly higher high. 432.31 is a weekly higher high. It's also a close above the previous weekly close on March 4th, and it's trying to break the weekly downtrend here. So this looks pretty good for the bulls if it holds all the way through into Friday. I am noticing that there is a 435 to 440 call spread going into Friday now, and they did an excellent job of burning every single put today. So what we're going to shift to now are going to be our normal ETFs, and then we are going to sign off. So what I want you to keep in mind is when we looked at the heat map, the sectors which were doing well, the leaders in those sectors, and then as we look at the weekly charts here to see whether or not it is doing what we would expect, or if we're seeing some divergence here. So S&P on the weekly looks pretty good. Can't lie. The low of the week last week, 415.14. Then we got 415.79 here, which means that we got a weekly higher low and a weekly higher high. That is a bullish engulfing candle, and we're currently at the high of the week, which means pressure built up, and it didn't really get released yet. We're closing at the high here. Looking on the daily chart as well, we can note that, again, we got that back test, filled the gap technically. There's a micro gap here. I wouldn't even really call it a gap. We did fill that one as well. And then we got our death cross here. So 441 is going to be, 443 and 445 are our 50 and 200-day moving average. And then on the weekly chart, we got our 50 weekly moving average here at 441. So I think psychological 440, 441, and then up to 445 if the bulls are going to continue to advance. In terms of what is leading here, we can also note that QQQ actually broke out of the wedge, which is very bullish, closed above 340 psychological, incredible, bullish engulfing candle, even with a lower low, and closing at the high of the candle here. Very, very, very strong. Again, we got a lot more movement to get back up towards that 50 weekly, and that's about an additional 6%. Already a huge move on the week, up by 5%. Moving here to XLF, we can note that we're closing back above the 50 weekly, and this looks okay. Nothing really all that bad here. Looks like it's trying to break bullish. Back above 39 was hard to confirm it, which is roughly 2% higher. XLV. XLV is pushing up the 50 weekly. We got a higher high and a higher low. It's forming a W pattern here, or a head and shoulders with roughly 137 as the neckline. So really important level for us to watch here. Shifting gears to the Dow. The Dow looks good too. Breaking the downtrend, higher high, higher low. Looks a lot better. And then we'll look at the Russell. Russell here again, right on the weekly downtrend. Looks a lot more like QQQ than it does SPY because it broke to a new low, but engulfing the previous candle here. Equal weight S&P also back above the 50 weekly moving average. So we need tech or QQQ to start dragging us higher if we're going to get over that 50 weekly on SPY. Also looking here at NYSE, looks pretty good too. And we can note that by, again, higher low, higher high. ARK, it's still channeling lower. We haven't quite engulfed the previous candle, but we got a 10% move on the day and 8% move on the week. We noted those inflows into ARK over the last 4 weeks as well. So it looks like if we're going to snap back, ARK is definitely going to go up more. And then last thing I want to look at here is going to be the dollar. So we're going to look at DXY, and this was part of what supported the market today as well. So when the dollar goes down, stocks go up. And today we can note that we're down by almost 1%. We're down by 0.76 here. And we can note that we didn't actually form a higher high. And this could potentially provide us with another roughly 1.5% if we're going to drift back down to roughly 97 on DXY. So I want to wrap up here by saying that it's been a very tumultuous trading week, and we have early evidence that the bulls are claiming short-term control of the charts. What we need to do into Friday is to minimum hold 432, and then getting back above that 50 weekly moving average, or roughly 441, would start to show me some progress in terms of what we can do into next week. Because this week, again, we got roughly 2 more trading days left, Thursday and Friday, OPEX coming up, and we still have a lot of uncertainty regarding geopolitics, and if the market's actually correctly pricing in what the Fed told us today. So just want to keep that in mind, and we will be back tomorrow with another video. And we're just going to go forward here to looking at the video from yesterday. And thank you very, very much for the support. It has been truly, truly nice to see everyone stepping up, dropping comments, dropping thumbs up, and subscribing to the channel. So thank you all. And Johnny, thank you here for the top comment. Made some beautiful trades last 2 days on QQQ and caught the whole move today. Appreciate you, man. Appreciate you. Hope you're doing well, Johnny. And if you're interested, the weekend video should queue up here in a moment. If you want to know my deeper thoughts, which is what I go through and talk about my bull and bear thesis. And I look forward to seeing you tomorrow. Good luck.